I'm looking at Ola, right? Okay, and I'm looking, when I respond, then I go like this, correct? Mark? Okay, and then I go back to her. So I don't really need to change the position of the mic. Looks
You are
okay.
now live?
Okay.
Hello, hello, everyone. I am super excited today. I have the privilege with a very special guest from R&J Capital, Robert. Please present yourself, who you are, what you do for how many years?
Hi, it's great to be here, Olga. Thank you for the invite. It's a big privilege. So yes, I'm Robert Niazov. I'm CEO and founder of R&J Capital. We're a mortgage company licensed in many states. We cover about 65 to 70% of U.S. population with the states that we're represented in. And I also have, as a passion, I study a lot of housing trends in the U.S. So it is important for my job, but I'm definitely not necessary. It's something I just love to do. But yeah, we're a mortgage company. When people buy homes, commercial properties, or need to refinance, this is who they go to.
What type of services you provide as a whole?
Um,
Only first-time home buyers, second-time
no,
home buyers, or
oh,
what type of services do you provide?
is a good question. No, definitely first-time home buyers is still a big segment of the market, but not only the repeat buyers or people buying their second home, let's say somewhere in Florida or in Pennsylvania. Also, we work with a lot of
Vacation homes?
vacation homes, right? But in addition, we obviously naturally work with a lot of investors, people who buy real estate to keep, to flip, whatever the case may be. So we work with those people as well.
You lend a lot of money to people.
Okay. So let's clarify this. I arrange it. I'm a broker, and we work with a lot of banks, and we make those banks compete for the best deal or the better deal. Now, also, sometimes it's not just about the best deal. Sometimes it's about a deal because the case could be so complex that only few banks will entertain it. And that's what we do. We go there.
What do you
And
mean by complex?
um,
Can you give an example?
I can give you an example. Let's say someone has a
Business.
business, or and they don't really wish to provide tax returns. It's just one example. Or someone could have, let's say, impaired credit. What do you do then? We don't give up. We see, if there is a possibility, we'll do it. Maybe there's a possibility of a fix, and then we can do this. So there's a lot of challenges. Someone only has, let's say, a small down payment. Also something we will not just say, okay, you know what, go get more money. Sometimes we say this because there's no other option.
What
But
is the minimum down payment that you have ever closed?
so traditionally, so there are programs with 3% down payment. We closed with one where the lender, they just had an incentive. They would give 2% more of the purchase price, and people just got in with 1%.
Wow.
Right. It doesn't happen that often, especially
What credentials you're supposed to have to qualify for that?
Okay, this is a good question. For something like this, it's only what we call with the full income documentation, meaning we need to see as brokers, or a lender needs to see, we need to document income. So tax returns of a person, pay stubs, and W-2s. They will, or if you're a business owner, the banks will also analyze business tax returns. So for the 3% down payment or 3.5% down payment in case of what's called FHA mortgage, and we can talk a little bit more about this. But you can't just say, okay, look, I'm putting 3.5% down. Sorry, I cannot show you tax returns. No, the tax returns.
You have to.
Not only you have to show it, because people sometimes say, hey, sure, no secret, here it is, but there's only 10,000 salary there. So it has to qualify. Makes sense, number one, but also there are formulas that banks, that the industry prepared for us, and we have to fit those formulas.
So you have to follow the guidelines to qualify.
Yes, absolutely. There are keys, there are guidelines, and we have to qualify.
So what would be your highest down payment that you, let's say, what's the lowest amount you ever lended to a borrower?
So as I said, there was one example when we got away with 1%, but normally it's 3% or 5%. That is kind of the standard minimum down payment.
Okay. Now, let's say if I have 90% to put down on a house, let's say it's $1 million house, and I have 90%, I'm short of $100,000. Would you take a loan like that?
Sure. Yeah. If somebody only needs to finance 100,000, which is only 10% of the purchase price, yep, absolutely, that's doable. Yes.
This year in 2025, what was your major trend that you witnessed?
Oh, yeah. I can talk a lot about this. As I said earlier, it's my passion. But I would call it, at least in the housing and the mortgage industries, in the real estate industry, I would personally call it a year of hope, where things
I love it. Everybody's waiting.
Things started turning around. So what happened? If you may allow me, I'll quickly share the history. Before the pandemic, was more or less, here and there, it was more or less stable. In the United States, we sold between 4 to 4.5 million homes. Then the pandemic came, and rates really plunged. Remember, the government lowered the rates.
Right.
So government issued a lot of checks, so people had money. And also the remote work was, a norm back then. So what happened? People have money, rates are low. Think real estate. I can put this money as a down payment. I can get away with a mortgage payment, where there's probably less than my rent. I'm buying a home. And this was on the minds of everyone. So the market got so hot that year in 2021, we actually had, as I said, normally in the United States, let's call it between 4 and 5 million. That year, only existing homes was over 6.5 million sold.
Wow.
It's a lot. But you understand, if you have this, then this comes.
Right.
So
organically.
Nothing you can do. It's all,
Especially 2 to 3% rates.
So those rates vanished, slowly. And then came 2021. Inflation was hot. We can talk more about that. And the market plunged. Rates were high. I'm sure you can comment on this.
Yes.
Sellers weren't willing to list their homes because they were thinking, well, you know what, my rate is, I don't know, 3%.
3%, I'm not moving.
4%. Even if I move, my payment may double. So why am I doing this?
You know what I called it? People living in homes that they don't love, but they're living in the homes that they have to be in.
Right.
They're not in the homes that they really love. A lot of people are stuck and they refuse to move, but there is a big hope, right? With this new potential mortgage proposal that Trump administration is trying to propose, and I don't know if it will be approved, where you could transition by taking your low mortgage and going into the new place, right? If they could do that, I think they will have a tremendous movement.
So what you're talking about is called portable mortgage.
Right.
Something that you can take with you.
Correct.
It's a great concept, but it's very complex, legally very complex. So there's a lot of paperwork. I don't know if they're actually going to find a solution to this.
To approve it?
I guess we'll wait and see. But, okay. So, yes, if you have a 3.5% mortgage right now in your name on a house A, and then now you're moving to a house B and you want to take it with you, that's great because that will,
keep moving.
Reshuffle the market.
But do you have to honor that 3.5% to a new amount that they're borrowing? Or it has to be two separate mortgages with two separate amounts?
Absolutely not.
So how's it going to work?
So that's one of the questions.
That's the complication.
Yeah. I love dealing with smart people like Olga. You see, she thinks progressively of what's going to happen. But that's the complication.
Because if I moved, I wouldn't be in the home where I am. I would time 2 minimum, right?
Well, I mean, okay.
Square footage wise, location wise.
So as you know,
property wise,
there are different situations in life. Some people upgrade, some people downgrade. So some people just, need to move because of the job. And this is another thing, by the way. And I had on my channel, I had actually a video to that effect that Americans are moving less. Now, it could be the effect of that, interest rate lockdown, as, people used to call it. But it's changing now. I also see,
People moving less.
people moving less for sure, but people are also more accustomed to the new reality that they are not going to have a 4% rate, that a 6% rate
Is
or
no
even
new
6.5.
normal.
It's not only the new normal, but historically it's the average.
Right.
If you take the period before 2001,
Mm-hmm.
when the rates really started going down,
Mm-hmm.
the average rate from a mortgage rate in America was probably in the sevens.
Mm-hmm.
Because of this period of 20 years of low rates, now the average rate is obviously lower. It's around 6, maybe high fives, but it is again kind of stabilizing around 6%. I'm talking about historical mortgage rates for the past, let's say, 50, 70, 80 years.
Mm-hmm.
Okay, and there is a recent statistics that actually about it's not a lot, but 8 million American households, 8 million plus American households now have the rates of 6% plus.
Wow.
So those are the people, and that are more likely to refinance or maybe move, according to our discussion right now.
Right.
If you have 6.5% rate, let's say, and you closed 3 years ago, and rates are around that number in 2 years, and they're ready to upgrade, those are the people that'll probably be more likely to move.
Regardless, I have to highlight something for you very important that I know as a real estate broker, that 1 out of maybe 5 transactions are cash deals.
Right. Oh, okay. Yeah, that's a great topic. I do have statistics on this as well. I came with that, with those numbers, that the number of cash buyers went up significantly.
Significantly.
2002.
Right.
2022.
Right.
Because of the high rates, so people
Right.
were looking, okay, should I get, the 8% rate or 7.5%, like it was in 2022, 23? And, they said, well, you know what, let's maybe stretch, let's borrow against our stock accounts, those who have it, and they would just buy a home. So that number is also, I would say, improving or getting worse, whichever way you look at it. But it was 31% of transactions were cash deals in 2023. Then it gradually went down. Now it's at 27. So it got a little bit better. And you're right. You were absolutely right. 1 out of 5 is probably a little more.
Yeah.
Maybe are cash deals.
A lot.
A lot.
A lot from what I see.
Right.
And for me as a broker, when I turn them upside down, and I like to do that.
Not only the customers, but everyone around.
I like to turn my clients upside down, and I always ask them questions. Can you avoid by not going to borrow the money from the bank? And the only reason why is because I think the closing costs and many other factors, right? But for me personally, that's just how I look at it. And you correct me if I'm wrong, right? I like to live in paid off house. Like, that's my dream, that's my goal. And this is what I wish for my clients. I like to have them pay off the debts that they have. And then I'm not saying to go to Bahamas and blow everything up that they're making afterwards, right? What I'm saying is that now invest. Make it so that you have the retirement money coming in to cover all your living expenses, because living expenses are becoming very expensive, right? So if we could really talk about what is your take on this as a professional broker, right? Because you've been around for over 20 years. You've been doing real estate for so many years. And I know personally a lot of clients in our community, don't go too far, right? That you've done business for them, that they are buying properties, flipping properties, selling properties. So what is your take as a professional expert? You're not only working with first-time home buyers, you're working with a lot of investors, you're working with a lot of flippers. Let's cover that a little bit.
So, yes, it's a good question. I mean, look, obviously, if everybody was buying cash, I would need to find another
You would
job.
be out of business.
Right. But why is mortgage a tool, and why is it needed? So obviously, number one, not everybody can afford to buy a house full cash.
Correct.
So that's easy. But I'll tell you another interesting fact. Even those who can, who have the money to buy even few properties, and we know those people because we see their bank statements, whatever,
Right.
we see their bank accounts, um, they choose to get a mortgage anyway. So
Right.
let's uncover why.
Right.
So here's the deal. Real estate, everybody knows. And this is also, I'm just taking from the statistics, from the government statistics, not just only private people who may benefit from that information. Over time, price for homes goes up, 4%, 3%. Right now the growth is not as high because the affordability is limited. And we'll talk about this in a minute. But I want to just answer your question. So imagine a situation: somebody wants to buy $1 million home, and they have this million, and they can just put it down. But if you're an investor, and let's say, okay, you know what, I have this million, let me instead buy 2 homes. I will live in one, and I'll invest in the other one. But now I have to finance, the second one because I only have $1 million. I'm buying $2 million homes. Maybe I'll get financing on one of them, or finance both of them a little bit. So what happens? Connected with the fact that I said the price for homes grows, now you have assets not of 1 million, but you have an asset of 2 million. You follow my thought?
Yes.
You have 2 homes at 1 million
Yeah.
each.
Equity.
And if you each grow at 4%, well, that's 4% of 2 million, which is 80,000, versus 4% of 1 million, which is 40,000.
But then you have the carrying cost for 2 properties.
You have the carry. Well, obviously you rent the other one.
Right.
You don't leave it empty.
Right.
You don't leave it. Now, look, people need to consider these facts. Being a landlord is not for everyone.
Correct.
You know what? I'll tell you more. Being a homeowner is not for everyone.
Perfectly said.
And nothing wrong with renting. Yes, but we also know that average net worth
Of
of
a
a
homeowner.
homeowner and a renter, you can't compare the two.
Over the years.
You can't compare the
You
two.
can't.
We're talking about, maybe, let's just say, the same renter, if he bought a home 20 years ago, okay, and compare his net worth now, that is probably 6 times difference. 6 times, 100,000 versus 600,000. I'm almost making it up a little bit, but it's a significant number. That's what I'm trying to say.
Absolutely.
So-
And I like to challenge people in general because I tell them that the rent money that you're paying for your apartment, just go to the bathroom, flush it in the toilet, and 2,000, 3,000, 4,000, just keep doing it every single month because that's what you're doing to your money, right?
Right.
In my opinion, this is my thought. Okay? Now, when you becoming a little bit more conservative with money, when you becoming a little bit more careful with how you spend your money, and I think this is the class we should teach and train our children, right? We spoke about before we started that I personally believe that our job as parents to train the next generation for the legacy of what the parents are creating. How do we teach our children, whether they like it or not? I know a lot of children that absolutely hate real estate. I'm not going to point fingers who, but I know a lot of children because the parents are constantly in movement, busy, 24/7 in real estate business. Children don't want to have anything to do with it. They want to do completely something else. But Robert, a question for you. Now that we're going in that direction, do you believe that children have no choice? Because if, for example, you have a client who owns, let's say, 5 to 10 buildings that he acquired over the years, and I've seen it day in, day out.
Right.
Okay? I have a client right now who was a porter. He was working in buildings servicing Manhattan properties. He saved the money. He bought one building. Then he bought another building. His kids didn't want to have anything to do with it. Now he is laying down on his deathbed where he is about to pass. His children are selling it for peanuts. And that breaks my heart. Why? Because the children, after the father's passing, they don't want to maintain the property, deal with the tenants, deal with insurance. They don't want to deal with nothing. So what's your take on those?
Obviously, it's going to differ from case to case. But we chatted with Olga before this live event, and I told her, I said it's really important that the parents do as much as they can to preserve this legacy that they worked so hard to build, and now it's just going, around the world. I gave an example of, let's say, how strong the legacy is, let's say, in the artistic world, in the families of musicians and actors. You see that the generations, because the kids see from their young
Childhood.
age, yes, from their young age, that okay, this is what my parents do, and they develop love to this as well. So not only we have to show, or those who own real estate, that it's only the struggle and stress, but also show the benefits. Hey, you have food on the table because of this. You go on that vacation, you went to that college because of this.
Yeah.
So that's what, the culture of this, the culture of, this job, which is not easy, but rewarding in most cases. That's what I think the parents should pass on to their kids.
Well, let me just dive a little bit deeper to why we do it. Do you do it just because you could make money on this, or you do it because you just love to see the passion and the cheerful excitement at the day of a closing or the day after? I always tell my buyers, look, right now you're numb. You don't feel anything. You go home, you sleep, and then when you wake up, it will be like, wow, I did it. What an honoring, exciting moment, right? For a buyer who acquired the property working so hard in America. They call it an American dream.
Absolutely.
Right? But what happens? As I'm telling you this, I'm getting goosebumps all over my body because I know the feeling. I know exactly what buyers are feeling the next day. Not the day off, because they still in that moment of heat and excitement, but the day when they wake up. And it's just an amazing feeling. So let's talk a little bit more about, do we do it because of money, or do we do it because of the impact that we could create and really see in people's lives?
Well, I mean, it goes without saying. It's definitely beyond. We obviously love to make a living, but it definitely goes beyond this. I'll give you an example, and I'm sure you experienced this, many times. I was at the event. It was a large event. I think it was a bar mitzvah, and I had it was maybe 200 people, maybe a little bit more, and I had this young couple who we closed maybe 6 months before that event. They said, okay, could you please come with us? We want to introduce you to someone. So there was their family, their kids, like teenagers, and their parents, like an entire family at one table. And they introduced and said, okay, because of this person, we have a home. And the kids said, thank you. Now they all have their own bedrooms, whatever. The parents said, thank you very much. You made our kids happy, and because our kids are happy, we're happy. So, but you cannot dignify this. It's it goes beyond any money that you can make or lose.
True.
So, but that's what drives me. Now, in particular, the mortgages. Why I love it? It's very unique to the circumstances of the person. There is no two exactly the same situations for people. Someone has higher salary, someone has worse credit, someone is putting 10% down, someone is putting 50% down. Okay, someone wants to, do some creative financing. So because of this, it makes my adrenaline go, and that's what that's another thing. And as you said, I mean, it's the legacy thing. My daughter, who is an attorney, is a young attorney, now joined the firm to help me continue, building the business, and eventually, hopefully, she can lead
Take
it.
over.
So, I do practice what I preach. I believe in real estate. I believe in America. If you ask me why, I will tell you. It's definitely not a secret. But look, those who are thinking, should I try? Should I not try? Go and get involved in the fight. It's so rewarding, and you will see that. Yeah, it's challenging. You will see. Let's say you become I'll give you two examples. You become a homeowner, and you used to be a renter. Okay, if let's say you have a roof leak, you used to call your landlord. Now you have to take care of yourself. Sounds like a disadvantage, and it is. But it is yours. If today it's worth 300,000. In 2 years, it will worth 400,000. So you will gain that. But that's the money part. But the other part, it is yours. Nobody's telling you is going to tell you it's time to move out. Nobody's going to tell you, you know what, you cannot paint it, or you cannot change the bathroom to your liking. And it definitely creates a sense of permanency, even if it's for 5, 7, 8 years. I think it's just so important in our lives.
Absolutely. Robert, you mentioned about investments. Do you believe in diversification, or do you believe only investing into real estate?
No, of course I believe in diversification. Of course I believe.
So if you had $1 million today and you won a lottery and you need to decide how you're going to invest this $1 million, what would you do?
A chunk of it will go into real estate, for sure, a big chunk. So if I just, won a lottery today and I got $1 million check and I paid taxes, I got more and I paid taxes and I net $1 million, I would probably invest about $600,000 in real estate, maybe $250,000 in stock market, I don't know, $50,000 for fun, and the rest in some alternative instruments like gold, silver, whatever, maybe even Bitcoin.
So you believe in diversification?
Diversification is the key. Now, why is this the key, Olga? Why is this the key? Because when you need to, everything goes up and down in price, and there could be a difficult market situation at the moment. Like if I can show the chart, it goes like this. So it has downside, but you see, if I started here, now it's here. So eventually it goes up. But it could be a moment where, right now it's not the greatest time to sell for one reason or another, but you must sell. That's why you diversify.
When did you start investing first in real estate? How many years ago?
So I started personally investing in real estate about 20 years ago, maybe 18, 19 years ago.
What did you pay for your first investment property?
$142,000 for a co-op in New York.
How much is it worth now?
A little above 300.
So it doubled.
It more than doubled.
It's
more than doubled. Yes.
We're talking about co-op.
We're talking about co-op. Yes.
So let's talk about residential first investment home.
Oh, well, I guess that was the primary residence. It was expensive back then. It was about 400,000, but today that home is over $1 million. And I still I still own that home. It's it's an investment home now.
Do you know why I love real estate?
Tell me.
I believe that real estate, you get a chance to have it, you get a chance to use it, and you get a chance to sell it. So you never lose money, in my opinion. Like even those days when in 2008, I remember when market crashed,
Right.
and a lot of my sellers were losing technically money or being a little bit of an upside down. Even when they sold it, they got all their money back. So technically, I always tell them, even if you break even, you live there for free.
Absolutely.
So technically, let's say, give an example. If you are an average renter today and you're paying $3,000 on, let's say, a 2-bedroom apartment, right? Multiply that by 12 months, you're looking about $36,000. $36,000, now you multiply by 10 years, that's $360,000, right?
Right.
Money in the garbage, right? Do you know how many people I have that own nothing, work for 20, 30 years, all their life in America, and own no real estate, but do pay rent? It just breaks my heart when I calculate a number. Because what happens in my head, this is how my brain is wired. I talk to you and I ask you questions. Do you pay rent? And your answer is yes.
Mm-hmm.
So what happens? How much you pay? $3,000. My brain goes right away. Wow, that's $36,000 a year. That's times. How many years have you rented? 10 years. Wow, $360,000 down the drain in the garbage. So that's really what drives me, because I know that I've been through the markets. When I got into real estate, 2001, that's when I bought my first home. And seeing, like you said, the chart going up and down over the years, yes, it's not stable chart because we are living right? Anything that's living, it goes up, it goes down, it has its cycles and circles. But over the years, we've seen that even if it goes down, I feel like every time it goes up, it goes much higher up than it was before. So we get a chance to acquire it, use it, enjoy it, and then sell it. What could be more rewarding?
Yeah, no, absolutely. And you know what it is? Even in my example that I gave you, you don't need to buy, let's say, a $400,000 home with 400,000 in your account.
Right.
Even if you have 50, 70,000, you save money over a few years, you borrow from relatives, your relatives help you with the gift. That's enough to get in.
Do you offer free pre-approval process?
Yeah, absolutely. So the pre-approval is a very important step for anyone looking for a home. We noticed that any self-respecting realtor will not take you to show a home unless you have a pre-approval. And it makes sense because, why should they waste their time, your time, and more importantly, the time of the prospective seller? Someone needs to get into the home, look at it, and then they only realize that, well, you know what, that person cannot qualify. So now about the pre-approval itself. It's a paper that shows that signed by a mortgage professional, that they checked the credentials, credit history, income, whatever, goes into the process. And they can buy a home up to a certain amount of, dollars as a purchase price with a certain amount of down payment. Now, anybody can create this paper, but we don't play with it. We actually go into the process of vetting the person, making sure that person can qualify. And we not only, then we don't stop there. We tell, okay, if something changes, your situation changes, your salary goes up or down, you, God forbid, lose a job, or you want to buy a more expensive home, let us know. We will revisit, my team will revisit it, and they will recalculate to what person can qualify now.
You have the whole team to do the pre-approval process.
Absolutely, yeah.
And there is no obligation.
Yeah, I can't do everything alone. We,
You have a very good operation.
Yes, thanks. Thank God for
Robert,
this.
I want to highlight something very important for the sake of my clients and those that work with me. They know how we work. As you know, I have a team.
Yes.
I have a team of professionals that do pretty much many different parts of business that I don't touch, right? But one of the really big major promises that I personally make to my clients when we sign that listing agreement is like getting married. It's like signing a ketubah for 6 months, okay? We're getting engaged, and this is what I promise you as your realtor, right? That I will promise you that every single person that walks through your door, it will be a person that is ready, willing, and able to buy your home. It is your job as the seller to make the property presentable and accessible, right? But I promise them that every single person that comes through your door will be pre-approved. That means that they are qualified, they pre-approved with all their credentials verified with professionals like Robert. So I do want those that are listening to me right now, the sellers, if you are on the market and you're looking to sell and for some reason things didn't work out, and I get a lot of phone calls from different sellers that are saying, oh my God, I listed with a broker, but... And Robert, you know how I am. I right now offer a listing verification process, listing audit process, I should say.
Now, what is that?
Listing audit process is that, let's say you engaged with another realtor who was, let's say, your friend. You made them a promise, you're going to give them the property for sale, but they are new in the business and they're not experienced and they don't know where to start. Do you know how many times people reach out to me and they ask me, Olga, I cannot sell my property. The first thing I do is listing audit. Listing audit means that I go straight into all platforms. I'm not going to get into details because it's my secret. But the first thing I do is I check absolutely all details. How did this broker advertise the property? I'm not going to get into pictures. That's another side of conversations.
Is it marketed? Is
Is it
enough?
properly marketed?
I got you.
I just recently had a case where the seller called me. She's going through divorce, which is a very heartbroken piece for me. But when she said to me, Olga, I cannot sell my property, I don't know what the process, the story is, I said to her, okay, who's representing you first? She's telling me it's her friend who just got in the business a year ago. So that's super clear that they don't have enough power and experience. So I go back into the audit. And what do I discover? That the taxes had a brutal mistake on Zillow where it was not properly showcasing the taxes of the property. So I started texting her, hey, what is the actual tax? She says to me it's 4 times less than the amount that's showing on Zillow. So right there, I already know. This is one of the little glitches that I discover. Am I going to tell the seller, hey, your broker didn't properly advertise? Not until we sit down and talk face to face. But what I'm trying to say is that as professionals, we see those mistakes. And we always want to address there is always a problem why the listing doesn't say, besides one problem sometimes I see, that the character, the personality was not a good match. You understand? This is very, very
You're
important.
talking between the seller and the listing agent?
Correct. Yes.
Yes.
Because I think that sometimes listing agents do take the listing just for the sake of taking the signature and say, oh, now I have the listing. That's not how it works. I don't need to take your property on the market for sale if I know for sure that you're way too far off to what the market could bear. If you're not in a position where you're willing to listen and follow the market trends and give yourself a little room to work with, look, if your property is worth $1.5 million, let's pretend, in Fresh Meadows, and I strongly believe you could give it a shot for just a little bit more, just a little margin to play with, I'm not going to tell you no. I'm going to give you that chance. But we would make a deal that, look, we're going to give it a shot. We're going to get the ball rolling. Within first 2 to 3 weeks, I take a heartbeat of the market, and I know as a professional, based on how the market is performing, with the activity, based on everything we do, what the feedback should be. If the feedback is 0, no heartbeat, you're overpriced. And we're going to have to revisit that conversation. I will give you the chance to try the market, but not for too long.
Yeah.
So going back, it's costing every homeowner money to keep a property, especially those that are going through divorce. You know, let's talk simple. Insurances, right? Insurance today, we all see, unfortunately, for some reason, I don't know the answer to it. You probably know. But the insurance is so crazy expensive. And people just cannot sustain their expenses. Between the water bill, between the insurance, between the taxes, forget about mortgage. This is what I'm talking about, live and pay off house, right? I personally think that even when the house is paid off, we're still going to acquire all these bills that we can never get rid of until you die, okay? But let's dive deeper into the insurance part because I think this is significant for people to know and understand.
Yeah, no, thank you for touching this. I just, the comment, not the comment, I just want to make an kind of an offer to those who watch and who have experience in your field. It's about giving. It's a little bit, something crossed my mind. If we're dealing with someone who is more junior in your field, I just encourage everyone, help them out. Okay, like Olga does, pointing out those mistakes that person made just because of the inexperience. I think it's just so noble to teach someone who is new and who wants to learn when you have the experience, and don't hide the facts. Transparency can go so far for you. But let's go back into about to insurance part. The homeowner's insurance is required by the lender because what happens, they lend the money and they say, well, in case, God forbid, the house burns down, we don't want to lose. We want to take that check and make the homeowner repair it so they can continuously pay the mortgage and live there. You see why the whole thing works? Because people don't want to lose the roof over their head. Mm-hmm. That's why the banks they're not easily giving out the money, but they know that people, if they don't pay,
insurance will cover.
Insurance will, if in case of the claim, insurance will cover. But let's talk about what happened with insurance. Because of the inflation, okay, if, let's say, to repair, a piece of brick used to be $2 per piece, and now it's $2.50. The cost of repair now goes up. So the insurance business is very complex, but the idea is simple.
Rebuilding value is more expensive.
So first, let's talk about the basics. Right. Insurance companies in the United States are very highly regulated. So what happens? The premiums come in, Okay, I don't know, let's say $1 billion. Then the claims come in. They pay. They're allowed to keep some profits, and then if there is, overage, they have to lower the premiums for next period. If there is a shortage, then they are allowed to increase the premiums. That's how the system, in a nutshell works. So if the premiums go up, that means their exposure or expenses or their claim payments go up. So let's now talk about why the claim payments go up. Natural disasters. We had a hurricane. Now, thankfully, in the New York area, we were spared of anything major the last 5, 6, 7 years. Okay? So that wasn't a factor. But what then was? There are two major things. Number one, the cost of materials to rebuild. As I said in my example, not just bricks, cement, wood, whatever, the lumber it's called.
Labor too.
And I'm getting there. And the second big part is the labor. If on average a worker, I'm just making it up, was receiving $200 a day. I'm just making it up, guys. I'm not trying to step on anybody's feet. Now they're probably paying $300. Well, they hire those workers, okay, and they know this. Their departments and insurance companies, they actually do this. They watch the cost. So then they say, look, you know what? Yeah, we paid the claim. It used to cost $350,000 to rebuild this house. Now we just rebuilt a similar house, similar footage, and it cost us $600,000, and we paid. Now the premiums go up. Not only this, because of this, insurance companies are trying. They're really trying. I'll tell you where. They're trying to mitigate these potential claims. As you may see, and I definitely see this because we deal this, we have to for the mortgage process. They send inspectors all the time. The pathway next to the house is crooked. Okay, the stairs leading to the basement are very steep. They look at the things that may cause a potential claim, and they tell, look, you have 30 days to the homeowner to fix it, otherwise no coverage.
I've been there.
So
I witnessed it.
So we'll see if that's going to help. But also, you understand, those inspectors also cost money. That goes into the cost.
So is it only applicable to New York?
No.
Or other states?
It's in states like Florida, it actually goes the other way around. There is something called a 4-point inspection. They actually inspect the roof. You see, the roof is the major thing. It's in a place.
By the way, do you guys land in Florida?
Yeah, we are licensed in Florida. Maybe on the bottom of when we put the recording, I'll put a link to my website, and on our website you will see our geographic area where
Coverage.
we operate. Yes.
Awesome.
So definitely Florida is pretty much the whole East Coast we operate in.
But now that we are diving deeper into all these details, right? So the cost of living in New York City is costing more, so therefore the labor is more.
Right.
And therefore the cost of all the materials is more. And now what about what's happening with the taxes to bring all this?
Which taxes? You're talking about income taxes? Or
No.
The real estate taxes?
I'm talking about
The tariffs.
the tariffs.
Oh, so yeah, tariffs at the
Are
moment.
they affecting also the cost of?
Slowly. It's not. It hasn't had a major effect yet,
Right.
but it might. Like for example, a lot of. So let's talk about this.
So creating tariffs is only benefiting the government or people as well?
We'll see. We don't know yet. I mean, the Trump administration is promising once they collect the tariffs, they will either lower the taxes. We'll see if that's going to happen, real income taxes, or they will send checks to everyone. That's what they're talking about. Nothing has finalized yet. But I'll give you an example. If to bring, we buy a lot of lumber. Everybody knows what lumber is. Lumber is wood used for construction. That's
Right,
lumber.
Right.
Okay, and we buy a lot of lumber from Canada. And Canada, there was a the tariffs imposed on Canada. So yeah, something that cost, the 2x4 is one of the major material component in building homes. So yeah, if it cost $11 and now it's $15, Guys, that's a big change. In percentage terms, that's like 30%. So close to 40% actually. That means it will be passed on to the consumer, and the insurance companies know to rebuild it. That's kind of it connects. But at the same time, it also means, think about this, the value of existing homes
Goes up
goes up
organically.
organically. That's where we started, why it's important to invest in real estate.
Robert, but my point is we cover also all states, right? Because I belong to a very large networking group, which is a referral networking group.
Yes.
And so anytime the client wants to relocate, move around, whether they got a job transfer in taxes, well, I have one potentially coming up on the market soon. He bought a business there. So now he wants to sell his property here in New York. My point is, if you go to other states, the properties are cheaper, much cheaper. And this is one of the reasons why a lot of people want to get out of New York. So not only we're not going to dive deep into this with new mayor that's taking over the power in New York starting next year, 2026, we thought that's going to really push a lot of New Yorkers to move, which we did not really see that. We expected that's what's going to happen, but that's not happening, right? So people are standing still, waiting until he takes over and see how his policies will affect New Yorkers. But I see that a lot of people are moving regardless. And so whether you're moving to Florida, whether you're moving to Texas, North, South Carolina, that's the 4 major states that we see constant movement, their residential homes are much cheaper.
Yes.
Why is that? If the cost is across the board in the country, right? For lumber and everything is about the same. So why other states, the cost of purchasing of a new home or just any home is much cheaper?
Okay. All right. It's a good question. So I guess there are several answers to this. Number one, the big factor is, of course, the cost of land. Land is cheaper in North Carolina compared to land, around Manhattan.
Location.
Nothing you can do. And the reason is there is a very, very high population density here. Why there is a big, high population density? Jobs. Okay? And the New York is a financial center, so a lot of jobs in the financial sector are here. Also, so land is one big thing. Second, because other things are cheaper over there. For example, if they sell meat, they have cattle farms, the farms with cows right there. So the meat could be, maybe a fraction of what it is in New York. I'm just giving you an example. It could apply to everything. The cost of living is cheaper. Okay? Because the cost of
the
living...
groceries, you mean?
Yeah, right. And there's less population. There is maybe less need for this competition. So obviously the prices are cheaper. But I'll tell you, you'll be surprised. They are slowly going up too.
Yes, other states too.
Yeah, they're also slowly going up too.
Yes.
Yes. So that's and then one thing that unfortunately also is happening in the insurance, particularly in the insurance fraud. There are, I don't want to say it's here more than that because I don't know, but big problem with insurance is actually insurance fraud. And I want to touch on the mortgage fraud as well, if you allow me. Maybe later. I would just want to discourage people from doing this because right now, the departments in insurance companies, department in mortgage banks, the mortgage lenders, that actually watch for these movements. Okay, so because it's taking so much money from people. It goes to certain individuals, companies, but as a result, it raises premiums for just the honest people. And what happens in our world, for example, in mortgages, a lot of people try to investment property. You need to buy maybe 15-20% minimum. Primary residence you can get in with 5%. So people try to present to us that it's going to be primary residence. In fact, they are going to rent it. So these days, it's already a big no-no. It was always a big no-no, but it can easily be checked. And the banks watch you after you do this. If you say it's going to be primary residence, you never moved in there, they will come to you and say, listen, we have proof. Here it is. You listing this property for rent. Okay, you never changed your utilities. The utilities in the place where you said you're going to move are right now on ABC person. Give us our money back.
What?
You have 1 week, otherwise we'll report you to authorities. That's what they do.
Wait a moment. We have to dive deeper into that. So if a person bought a property and on their documents they claimed it is their primary residence and not investment property,
Correct.
and then they put it on the market shortly after they bought it for rent.
Yes.
So the bank has the rights to come after that person, showing the proof that they never moved in to make it their primary residence. They right away put it on the market to rent, and they rented the property out by reporting to the bank that it is their primary residence. So technically, in the bank's eyes, that's a fraudulent loan.
Oh, yeah. So what happens at closing, if you are buying a primary residence, you sign a paper. It's called an occupancy affidavit, that you are going to reside in this property for at least 12 months. So after a year,
You could do whatever you
it's
want.
fine. Yes. That you're going to reside there for 1 year. And they don't come to you 1 month after. They watch you
Really?
few months, just to build the case.
So wait a moment. They have people to do that?
The whole departments.
You're
They
kidding
have
me.
post-closing departments. It's actually called like fraud investigation units, something like this.
Wow. This is
So-
interesting.
Yeah, it's a new reality. So I'm just urging everyone, please don't do this. It's okay. There's still ways to get your mortgage done. By the way, sometimes the reverse happens. People say that it's investment property and they're going to live there. Now, what that happens for for some investment properties, we can use the rental income, which they do not have otherwise. So that's called the reverse occupancy fraud.
Wow.
So,
So I just want to reiterate. So let's say if you bought a property and you're claiming it as a two-family home that potentially has an income to show the bank that you have extra income from your rental income as an additional income for you to qualify for a higher loan.
no, I'll give.
Right?
I see what you're asking. So
Right.
no, let's say you're right now living with parents, and you don't have a lot of income to show, and you want to buy a home to move in there. Let's say you work off the books.
Right.
Okay. But, you say, well, you know what? I'll probably rent it. So now the bank can count 3,000 rental income. So now all of a sudden you qualify. But you never moved in there. I'm sorry. In fact, vice versa. You, in fact, moved in there. You presented as an investment, but it became an owner-occupied property. So that's a reverse fraud. You use the income that you don't actually have. You follow me?
Absolutely.
Yeah. So all of these things, I mean, I just say, there's absolutely no
Be honest on your
yeah,
applications.
no upside in playing games. Absolutely not. So I want to discourage everyone who, whoever thought about this, and I'm sure there's no one on this phone on this live, but yeah, it's a big problem these days, and banks are watching.
So let's talk about, now that we are going in that direction, let's talk about the do's and don'ts. Because I think that recently you and I have closed a transaction, and there is something that we would like to share. When a buyer is getting prepared to come in and look at the property, right? What is it that absolutely must have, so Olga doesn't call you every single week and get an answer that you need more time?
You need law, and that I love talking to you, so you can call me anytime. Okay, so let's go through this. There are basically
So
four,
let's talk about the do's.
there are 4 elements. Let me quickly, the do's. There are 4 elements, and then we'll talk about the don'ts. There are 4 elements of the mortgage process that everybody should be aware of. It's the income, employment. I mean, I hope you see the difference. Income is just how much money you make, and the history of you making money, and more importantly, the probability that you will continue earning. That's very important. That's income part. The employment part is connected to this, but it's a little different. They want to see that your employment is stable, that you not job hopping every 6 to 8 months. Believe it or not, if the banks see that you cannot stay at the same job for a long time, they don't like those cases. So that's employment. The third one is assets, meaning your money in the bank, how much savings you have. And the fourth one is credit. And I'm not saying that the importance of them is in this order. They're all important. So again, income, employment, assets, money in the bank, and credit. So about the income, if you are working and you have a W-2 or you're self-employed, we will ask for the tax returns, and hopefully there are formulas that we use. Hopefully it's enough. Employment, if you have a stability for past 2 years, that's also fine. You have a question?
No.
Okay. And then assets. This is a major category. Okay. Assets is the money that you need for the transaction. So I'll give you an example. Let's say you are buying a home for $600,000 and putting 10% down. So $600,000, 10% down is $60,000. So you need to have the $60,000 on the account plus the closing cost. Let's just call it $20,000. So 60 plus 20, that's additional 20,000. That makes it 80. You need to have it in the account by the time you close. Ideally, that you have this money even before you sign the contract. What happens if there are any large deposits?
Throughout the process.
Even a month before the process started. The bank wants to know. And it's not what bank wants to do. By the way, banks are, only making money. Please understand. I want everyone in the audience to understand. Banks, lenders are in the business to make loans. They want to approve loans. Okay? Because if they deny every loan, that's not how they live. They give money, you give them interest, then they sell it. This is how they make. I'm not going to go into all the details of this, but they only make money when they close loans. So they want to close loans, but they also want even more, not for people not to default. That's why it gets it so complex. And they're protecting themselves, and now they also are being regulated very heavily by state authorities, by federal authorities, to comply with the laws that they have. Now, Trump is talking about a little bit of deregulation, maybe simplifying some of the rules, not like discrimination rules, like they will never do anything based on the race or age or familial status. Those we understand. But going back to to the point, banks want to make a deal, okay, but they just don't want to be hurt, okay, because it's really costly for them to start the foreclosure process if they have to. Now, what I urge everyone, please do not move money. We'll talk about the don'ts, but while we're on this topic, moving money is a problem. And we'll talk about the don'ts. Well, I'll open it up a little bit more. So you need to have money in the bank. Now, one more category that bank may require or may not, depending on the transaction, is called reserves. Reserves, everybody forgets, and I also have a video on my channel about this. Reserves is not the money that you're going to spend necessarily on the transaction. The bank wants to see, or banks want to see, that after you paid for the down payment and closing cost, you're not left. You're left with something. You're not in your bank account.
What is average? What are they looking for?
So average, okay, that's a good question. It's the 6 months of your mortgage payment. If your mortgage payment is $4,000, mortgage payment means mortgage payment, taxes, and insurance all combined for 1 month, multiplied by 6. So if it's 4,000, you multiply by 6. In this example, is 24,000. So that's in addition to what I told you for the down payment and closing.
So wait a second. How do the banks look at those that only put 3 to 5% down then?
Okay. So for 3.5% down, many times the reserves are not required. It's usually for repeat buyers, but sometimes it is. If you buy an investment, if you buy a multifamily home, you can also get away with 3.5 to 5%. The reserves are going to be required there. Now, the reserves, the good part about reserves, it doesn't have to be your, what I call like liquid money or money that's accessible now. It could be your pension plans. It could be money sitting, let's say, on your investment account. Could be even something called, cash.
Stocks.
Stocks are fine. They take a certain percentage, but stocks are fine. Uh, and then why they take a certain percentage of if stocks specifically, because stocks may fall and lose value.
Mm.
That's why it's a certain
So they
percent.
consider everything.
Right. They very, believe me, banks are very conservative.
Consider.
And things like even cash values of life insurance, something that grew when you paid premiums in your whole life or universal life policy, that your cash that you can take can also serve as reserves. So there are ways. What I'm
So
trying
you
to say,
turn them upside down.
we have to. Sometimes we have to, but there are ways to simplify the process. So let's talk about the don'ts. Oh, let's talk about the credit first. The credit also, if you made a late payment on something, we call it a credit event. So we shouldn't have those credit events. If you pay on time, if you do not overutilize yourself, we'll have situations where people actually never made a late payment, but their credit score is low because they have 3 credit cards and they're always filled to the max. Ideally, if you have to do this, ideally you should stay 30% or below of your credit limit.
Pay off in full.
Pay off in full is the best case scenario, but if you can't or have other reason not to,
Well, now we're on holidays. You know what's coming.
yep, I know.
Credit cards
Right,
in malls.
right.
So no shopping if you're buying a house?
Okay, so let's talk about the don'ts because it's part of it.
Yeah.
Yes, right before you buy a home, please do not go on if you have a credit card, let's say with 1,000 balance and there is $6,000 limit, please do not go and put another 5,000 on it because your credit score might drop. Also, do not open or close any existing credit cards. When you apply for credit cards, this is how the machines model it. People behind the machines, but this is how machines count it. If you apply for several credit cards in 1 week, the machine, the algorithm thinks that you're in financial difficulty and your credit score drops. So it's those little things. Many times people don't know how good and skillful their mortgage broker could be, but I encourage you gotta ask those questions. Okay, educate yourself. It's so important. So do not buy anything, like don't make any major purchase. Do not lease a car. Do not open or close credit card. It's really important. Do not move money between your accounts because it creates a mess. Every time you move the money, it has to be explained. It could, if you have to, okay, there's no choice. But it's better. So people sometimes tell me, okay, we have money for down payment and it's on 3 accounts. Don't worry, Robert, or, they tell one of my assistants, we'll combine it today into one, let's say, I don't know, Chase account from the 2 others. No. Better give us 3 statements. Give us 3 statements. That's okay. So don't move the money. Don't co-sign for anyone when you.
What about cash deposits?
Cash deposits are a big no-no.
What happens if you do it throughout the process?
Well, if you did it a year ago, and I don't know about this because I don't need to show to see your 1 year ago statement, I guess, nobody would know, and I wouldn't know either, but generally anything you put in a bank account has to be traceable. Like your salary, we'll see you work for, I don't know, Walmart, we'll see that the salary goes there and says Walmart, direct deposit. Okay, and it will match with your pay stub. But if someone gives you a gift of 10,000, you better believe it. Bank will say, okay, we need to see the source of this. So then you need to go to your sister-in-law, your cousin, whoever gave you. And by the way, gifts are only accepted from close family. You cannot, the gifts from friends cannot be used for mortgage process. Only close family.
Got it. Okay.
So
in conclusion, Robert,
Yes,
it was a
dear.
very informative episode. Thank you very, very much. We have so much more to cover, hopefully on our next live. But today I want to ask you one last question. What would be your take for the next year? What are you predicting?
I'm very excited for 26. I don't think we're going to have a real estate boom. I also don't think the rates are going to be, in the fours. My range for the mortgage rates is anywhere between 5.25 to 5.5 to 6.5. So they will be a little bit better than they're now, but they will be today they're around 6%, but they will be stable, which is also a good thing. You know, the fact that they're not going to go back up. I think I think the affordability will improve. What is affordability? Affordability is the obviously the ability of people to buy a home. Their salary, the price of the home compared to their salary. So the salaries are going up, and the home prices are not going up as much. You understand? So salaries are ahead a little bit. So that improves affordability. Combined with a little bit lower rate, maybe more people will buy homes. But there are also pockets of the country like Indianapolis, Indiana, upstate New York, where people have a lot of activity because prices there are lower, and it's a lot easier pill to swallow when you buy a $250,000 home compared to $1 million.
Got it.
So I think you will see some more some more inventory in our area. I mean, I want to know your opinion as well. And all over it will be, we're on the right trend. I think we're going to have, 4 million plus homes as usual sold in the U.S. in 2026.
Awesome, Robert. This was such an exciting, informative episode. I thank you very, very much for your time. Do you have any last-minute stuff that you want to cover?
I do. I just want to thank the organizers, specifically Olga, for making this event possible. I know she works hard. We sometimes text around midnight, on different issues. It's all about giving back, to the community, to people we love. So I commend you for your hard work.
Thank you.
And continued success in your personal and professional life.
Thank you, Robert. It was my pleasure. I'm looking forward to closing more deals with you this year.
Likewise.
And I really pray and hope that we will have a great year ahead. And just want to wish everybody a wonderful 2026 ahead. It is a great honor and opportunity to serve you all. Until next time, thank you.